correct?
Yes.
So I think we can also record as well. Thank you.
Yes.
Good morning, good afternoon, good evening, everyone. Thank you for joining this public webinar session to discuss the fourth in our consultation series on climate risk. The consultation was published on the 15th of July, and you can get the full consultation on our website. The slides for this webinar are also now available on our website if you want to use those to follow along with the presentation. We will be recording the session, and we will be adding the recording to our website in the next day or two, so it's available there should you want to view it again or share with any colleagues. I'm going to run you through the agenda for the session. So today we're going to have an update on the work that we've done so far, the EIS has done so far on climate risk, give some details on what an application paper is and supporting materials, and also update you on the timelines for the process. Next, we'll then go into the contents of the two papers. Firstly, the paper on public disclosure and supervisory reporting, and then secondly, the draft supporting material on macroprudential group supervision issues and climate risks. We'll then take your questions at the end, so you can add your questions in the chat or raise your hand and you'll be unmuted. Just a reminder, obviously, please identify who you are when you speak or in the questions. And please feel free to drop questions into the chat as we go along so that we can answer those once we get to the end. That's it in terms of introduction. I'd now like to hand over to Hannah van Voorden, who's Head of Supervisory Practices and Operations at the IS Secretariat. So over to you, Hannah. Thank you.
Thank you very much, Joe, and welcome everyone. Thank you also from my side for joining us today for this session. I must also say that Daniel Wang, the chair of the Climate Risk Steering Group, unfortunately sends his apologies. But as you can see, we have Jan Marien with us, who is the vice chair of the steering group, and I will walk you through some of the elements of today's presentation as well. So first of all, I will set the scene with a couple of slides. First, some terminology, just in case some of you are less familiar with the work of the IAS and the products that we develop. So the core product of the IAS as a standard setting body are our insurance core principles, or ICPs in short, and they form the globally accepted framework for insurance supervision globally, and they apply to all insurance markets and insurance companies. They seek to encourage the maintenance of consistently high supervisory standards in all our member jurisdictions. These are called supervisory material. We also develop as the IAS supporting material. One example is an application paper. An application papers is the type of material that is currently for consultation. So they provide supporting material in the sense that it does not set new requirements like the ICPs do, but it is more about providing advice and recommendations and examples of good practice on how the actual standards and principles can be applied in practice. The proportionality principle applies to the content of our ICPs and also of application papers. But in case of application papers, we often try to expand a little bit more on how this can actually be applied also in practice. As many of you will know, the IAS work on climate risk is comprehensive and touches upon the various activities of the IAS, from standard setting, supervisory practices, capacity building, to also data collection and analysis. Here we also try to focus on each of the different areas that our members have in their mandate. So it's both related to policyholder protection, financial stability, but also around promoting the maintenance of fair, safe and stable insurance markets. As mentioned already by Joe in introduction, this is the fourth public consultation in a series that kicked off last year in March. This is also a final public consultation. And we also already thank everyone who participated in the earlier consultations because it has helped us to further develop our materials. And we will develop a final version of all these materials once this fourth consultation has also been finished. As you may know, the initial consultation deadline was sometimes in September, but we have decided to extend the deadline to allow everyone sufficient time to consider the proposals and provide meaningful feedback to us. So the new deadline is 28 October. Just to recap also what was covered already previously in terms of the topics and the ICPs that we discussed in the previous consultations. So the one that we published last year in March was a relatively shorter consultation, more setting out the scope of the work and also introducing certain changes to our ICP introduction to make clear that climate-related risks are covered in the ICPs and how they relate to the various standards across the ICPs. Then there was a package published in November last year, which focused on issues around scenario analysis. It also touched upon issues on macroprudential supervision. I will talk a little bit more about that later today. And there was a paper related to market conduct issues. Package 3 was published earlier this year, and that included also some changes to the ICPs, not necessarily to the standards, but more to the guidance and explanatory materials within the ICPs. And there was various supporting materials related to topics on risk management, governance, but also valuation and other topics. And as I mentioned, today we're discussing the fourth and final package of our series, where hopefully together this will cover all the relevant items related to supervision of climate-related risks. So with that introduction, I will now hand over to Jan to walk you through the main elements of the public disclosure and supervisory reporting part of the session today.
Thank you, Anna. So thank you very much for this introduction. I'm the Vice Chair of the Climate Risk Steering Group at the IIIS, and I have chaired also the work on the climate risk disclosure. We have reviewed very thoroughly the ICPs and considered that the existing ones, namely ICP 20 for public disclosures and ICP 9 about the supervisory reportings, were actually covering general principles that were applicable also to climate risk, and therefore didn't need a modification. But guidance was needed in order to implement those ICPs when it comes to climate risk disclosures. And therefore, this is the application paper that we have prepared to support the work of supervisors when it comes to designing and creating a consistent supervisory reporting and disclosure regime. The 5 elements that you have on this slide have been addressed in the application paper. So 1, developing a disclosure regime. What does it mean? What are the necessary elements? What are the indicators that should be taken into account? So that's public disclosure of decision, useful climate information. This is the focus that we have been trying to implement in this to make sure that what is published is actually relevant to stakeholders. You have also considerations about supervisory reporting, so I will not go too much into detail about this, but that's really about how supervisors could consider treating confidential information that is needed for supervision of climate risks. The 4th element is governance, of course, how those elements should be integrated into the governance structures of insurance companies. And in the end, we also addressed the data issues and limitations that would come with climate risk disclosures, knowing that it's a very quickly evolving matter, and that new pieces of information are made available or new sources of information are made available as we move forward, and we need to integrate the best of it into the disclosures. So next slide, please. So what is the objective of this application paper? it's really to provide supervisors with advice on consideration related to the development of supervisory regime and public disclosures. So supervisors need to consider really thoroughly the adequate information needed to be shared with policyholders, market participants, supervisors, all stakeholders that you have out there that need this information to actually assess the climate risk undergone by insurers. And the application paper is providing clear and general principles on how to approach these matters and to create regimes that are tailored and dedicated to their specific jurisdictions and their specific needs. Next slide. So one thing that we want to make clear about creating a climate risk disclosure regime is that the supervisor should explicitly consider whether they need to supplement the existing disclosure requirements on climate risk if they have any in their jurisdictions. Usually you have a general framework that is applicable for all companies, often with some kind of thresholds, and it could integrate some sector-specific measures already, but then the supervisors have the need to analyze what is already provided by the general framework and see if it's suitable enough for insurance company. Generally speaking, what we have observed is that general disclosure regimes do not actually capture climate risk in a way that is consistent with the ICP20, so with the core principle that has been designed within the IAIS, and therefore new requirements need to be created by the supervisors, depending on their institutional arrangements, of course, to meet the requirements set out in the ICP20 and actually ask the insurance to make sufficient clear disclosures about the climate risks they are meeting in the future. So this is where the supervisors need to be very clear, and they need to communicate what they are intending to do when it comes to complement those disclosure requirements. Next slide, please. So, of course, we acknowledge in the existence of the global baseline developed by the International Sustainability Standard Boards. We consider that it's a good basis for a framework consistent with the ICP20, and you have the specific line that is to be considered there. But what we would like to specify that the supervisory framework would include the three elements that you have there. So the general international standards, IFRS S2, or the jurisdictional standards. We have the European or the American one that have been published recently. But on top of this, you need insurance-specific requirements that will take into account the activity of insurers and the way that they are operating, so their requirements is actually consistent and provide sufficient elements to assess the climate risk that they are undergoing. And then you may have an additional layer of requirements applied by insurance supervisors to ensure that the sectoral requirements and the general standards are complemented to a sufficient extent and therefore be consistent and complete when it comes to the implementation of ICP20. Next slide. When it comes to the public disclosures of decision useful climate information, so here we are actually targeting the indicators or the set of indicators that should be disclosed to the public. We consider indeed that disclosure regimes should integrate climate considerations, of course, and therefore provide new indicators that would help in understanding the insurer's disclosures and enhance the comparability of information. So here, supervisors should guide insurers and make sure that they are sufficiently transparent and consistent when they use data sources and methods to compute their climate indicators. So stakeholders are actually able to take into account those elements and compare them and make informed decisions when it comes to investment or to become a policyholder within insurers. We want also to make sure that supervisors encourage the use of forward-looking indicators. This is the nature of climate risks. They are not captured entirely by historical data, and therefore we need to use new methods, including scenario analysis or stress testing of some kind of forward-looking indicator to capture the risks that are coming and not maintain the illusion of the current situation being prolonged in the future. Lastly, this is very important also, we need to have a clear method to analyze the way forward and to integrate the possibility of reviews. So those methods are updated as they are becoming increasingly available and also easier to share. In the sense that the academic work that is currently done on those matters are actually providing progress, and this application paper is not meant to be set in stone, but to be evolving and to make sure that all the processes that are discussed there are reviewed and updated according to new findings. Next slide, please. So, as I said, I will not go too much into detail when it comes to supervisory reporting, but those are the principles that are laid out in the application paper. We need to clearly communicate the supervisory reporting strategy, and the supervisors around the world need to communicate on this. Climate risk need to be fully integrated in the supervisory reporting framework. Of course, materiality is an important element on this. There is no point in asking for data and information that are not useful for the analysis of climate risks. But it's also important for supervisors to get the full picture and to be able to conduct a gap analysis of the information available publicly and what they may be in need for when it comes to compute their own analysis and assessment of the risk profile of insurance companies that they are supervising. As mentioned, we are expecting to see those frameworks evolve over time. It's true also for supervisory reporting, not just for public disclosures. Progress are being made as we speak when it comes to the analysis of these climate risks, and therefore they need to be consistently upgraded as the time goes. We have more work to do on this topic. Definitely, we are intending to in the IAIS to look more into details and see how we can provide supervisors with more guidance about the indicators that could be useful for them and for stakeholders. Next slide, please. I mentioned, yes, indeed, the governance part that is also discussed in the application paper. The element that we want this is to make sure that the governance of insurance companies is actually updated to the level that make sure the entire institution is fully organized to create necessary public disclosures and to provide the level of details and granularity that is necessary for the stakeholders. So in this, the supervisors should also consider when they are assessing their insurers how the markets may benefit from understanding the processes that have been implemented by insurers for identifying, measuring, monitoring, controlling climate-related risks. So those should be made public to a large extent. Of course, we are integrating the confidentiality of some market-sensitive information that may be necessary to keep confidential. That being said, markets should be provided with sufficient details on how this is done within insurance companies, and also trying to prevent as much as possible the risks of greenwashing in information that is disclosed that way. Next slide. And yes, I'm done with there. And if you have any questions, of course, I remain at your disposal at the end of this session to provide answers. Thank you, and back to you.
Thank you, Jan. So now we will continue with the next paper that was published, which deals with macroprudential issues and issues around group supervision. As I mentioned already before, this is a relatively short paper that we published. The reason it's short is because it's built upon existing material that the IAS has already published in the past. The first one to mention is the application paper on macroprudential supervision. This was published alongside the development of the holistic framework and the development of the revised ICP 24 that covers macroprudential supervision. That paper already covers quite comprehensively the different tools that supervisors can use in their supervision of the insurance sector from a financial stability perspective. It discusses data collection, data analysis tools, necessary supervisory responses. And much of that material is also equally applicable to how supervisors need to assess the possible macroprudential implications from climate change. Therefore, you will note also that the existing text that we have now published for consultation is closely aligned with that application paper. Actually, in many cases, it's the exact same text, but then we just add additional considerations on how the existing language would apply in practice as it relates to climate change. So in the case of, for instance, issues around time horizon, issues around data quality and availability are highlighted as they may be particularly relevant for the topic of climate change. Another existing paper that's worth mentioning is the application paper on climate scenario analysis that we published in November last year for consultation, because that also touched upon several ICP 24 related standards, notably the role of how scenario analysis can help assess the potential systemic importance of the insurance sector and insurance individually, how climate-related scenario analysis can help inform supervisory responses, and then it also set out the various supervisory responses that are possible. And it also already touched upon the extent to which supervisors may wish to publish elements of the outcomes of the scenario analysis exercise and other relevant data and statistics. So we're not repeating that in this publication. We're only trying to add to that earlier publications. If we move to the next slide, you will see that the addition in addition to the macroprudential supervision material, we have also included a short section which really tries to highlight group issues. So this is related to groups in general, but most importantly to group supervision of internationally active groups. So we know it's a much heard concern that there might be an extra burden associated with various requests from different supervisors related to climate change. So this part of the consultation also tries to reflect the need for international coordination among supervisors, for instance, through a supervisory college, to together, for instance, design certain requests to insurers, design priorities, but also discuss the climate-related risks at a group level for internationally active groups or other groups. So as mentioned, that's a relatively short section, maybe just half a page, but nevertheless important section to explain how the supervisory college could discuss climate-related risks in relation to the supervision, the corporate governance framework, the risk management, possible scenario analysis, etc. So with that, I think we have finished the more content part of the presentation today. Rests only to share with you a final reminder on the different timelines and the processes. So as mentioned before, the deadline for responding is 28 October. And feedback is sought on all of the materials. You are feel free to send any general comments or comments per section. It's not necessary to respond to both papers. So you may also wish to respond only to one of the two papers. You can submit your feedback via the consultation tool, which you can access on the IAS website on our consultation page. And then in terms of next steps, so the IAS will consider the feedback after this final consultation has been finished. We will then develop a consolidated paper, which will bring together all the different elements of the last 4 consultations. And we anticipate to publish that one early next year. So with that, we've come to the end of this session, and we still have some time left. So we would be happy to answer any questions or receive any initial comments that you may have. As Joe mentioned, feel free to raise your hand or just write your question in the chat function. That's also fine, and then we will read it out and make sure to get to it. So I'll hand over to Joe to manage this, but I do already see one raised hand. So thanks for that, Dennis. And others, please raise your hand or just send a message in the chat. Dennis, I think we were trying to unmute you. So
Thanks,
you may want to
Hannah.
try to speak.
I hope you can hear me.
Yes, I can hear you now.
Perfect, thank you so much. Yes, I'm Dennis from the Geneva Association, and thank you very much for this presentation. You mentioned at the beginning and at the end that the 4 climate packages, will be consolidated into one paper. Can you elaborate a bit more on what kind of paper that will be? Will this be one application paper? And a related question is, will there be another consultation on sort of the final package, basically? So thank you for that.
Yes, thank you, Dennis. So it will be consolidated into one paper with different sections. So the application papers and the materials that were published so far, they were all focused around certain themes. So there will be, for instance, one section covering climate scenario analysis. There will be a section covering disclosures, a section covering risk management aspects and governance aspects. So we will be bringing together all the materials that were already published for consultation, and there will be no or only very limited new material added to that consolidated package. The new material will just be making sure that the introduction reads well and that there are no duplications or repetitions between the different sections. But because there will be no new material in that overarching paper, there's not going to be a 5th consultation, so to say. So all materials will be packaged together so that if someone wants to see the kind of the IS material related to climate-related risks, they can find it all in one paper. We will also update the ICPs later this year. We will already publish the updated ICPs once they are adopted by the annual general meeting. But the application paper itself will be published only early next year.
Thanks, Hannah. That's great. We actually have quite a few questions now coming in on the chat, so I'll read out a couple of the questions and then we can take them in batches. And also just a reminder to people to make clear what organisation you are asking the question from. So first of all, probably one for Jan. Somebody says, will you be doing anything on transition planning? And that's the first one. That's from Mirko Kraft. And then we have one from Elizabeth Jacobs, who says, given the interactions between banking and insurance sectors, is the IAS engaging with the BCBS, promoting consistency for cross-sector climate-related disclosures? A similar question, ICP 24. What may be the connection with this work and the recent BCBS consultation? So I think the first one is definitely for Jan, and then I guess a combination of Jan and Hannah for the second one. Over to you, Jan.
Yeah, thank you. For transition plans and transition planning, work has been already done by actually the Sustainable Insurance Forum on transition plans, and a report is to be published on this. When it comes to the IAS itself and the guidance that may be provided by the IAS, it's discussed among members, and it's definitely a possibility. But for now, we don't have a clear mandate to move forward with this. So it could be the case in the coming months that we actually do that. Yes.
And then Jan and Hannah, the point on also the links between our work and the work of the BCBS, both on climate disclosure and on also ICP 24.
So about the disclosures, I may say that we have discussed and coordinated our work with the BCBS. There are differences in the way that banks and insurers are operating when it comes to the analysis of climate risks, and definitely specificities were taken into account by the IAS, but we coordinated with a number of stakeholders, of external stakeholders, the IOSCO, the BCBS, the ISSB actually also, and others, to make sure that we had a clear understanding on the work that was going on in other international organizations, and that we were taking on board their very good points, being mindful at the same time that insurers have needs that may not be covered by others. And therefore, in particular, I think, of course, about underwriting and the risks that are borne by the liability side of the balance sheet when it comes to climate risk. It's not the same for banks, where the risks are more located in the asset side, for example. That's something that we have discussed with the BCBS and others, but we are still independent in the way that we are providing those frameworks.
Yeah, and I would maybe only just add a more general point around coordination across different standard setting bodies and international organizations. So as you may be aware, the Financial Stability Board, or FSB, they published a roadmap for climate-related risks the first time, I think it was 2 years ago, which brings together in one overview all the work that the different sectoral standard setting bodies are doing on climate-related risks. So IOSCO, BCBS, and IAS, amongst others. So there is a lot of coordination and across the different standard setting bodies around our work program on climate-related risks to ensure consistency in approaches. So that's definitely the case. But as Jan highlighted as well, there are of course always sectoral differences that give rise to give rise to having a separate elements discussed in our different materials.
Thank you, Hannah. We'll take a couple of more questions from the chat and then I'll go to Dave Schneider. So first of all, from Anne-Catherine Hoffman, to my understanding, the European CSRD and ESRS reporting is more detailed than the IFRS sustainability reporting standards. If so, is it fair to expect that insurers based in Europe will have less need for additional reporting? So we'll come back to Jan for that one. And then also Jerome Krugnola, from the Actuarial Association of Europe says, for the disclosures consultation, is there any consideration of double materiality, i.e. disclosures that also cover external impacts of companies on climate change, i.e. inside out, as is requested from the European perspective? So I think, Jan, both of those are questions for you.
Yes, thank you, Joe. In Europe, indeed, you have already a disclosure regime that has been provided by various directives and regulations at European level, and that are currently to be implemented. I think the implementation date is 2026 for most of them. This is jurisdiction specific, let's say, and as far as we can tell, the disclosure regimes in Europe is indeed consistent with the ICP 20 and probably going way forward, way further, considering that it covers the entire ESG scope, so environment, but also social and governance. It includes other environmental risks and not just climate risks. So we can expect actually that in Europe insurers will have to do more than in other places, but this is not the IAIS work to be taken into account, and therefore there will be no jurisdiction specific comments at the IAIS level. The second question, sorry, Joe, can you remind me?
Yeah, of course. This is from the Actuarial Association of Europe. For the disclosures consultation, is there any consideration of double materiality?
Oh, yes. Double materiality has been discussed within the IAIS, but as you may know, there are differences in approaches at the international level, and no consensus about whether this should be included. So for the IAS part, we considered that the forward-looking nature of climate risk is actually somehow integrating elements of impact on insurers' activities on the environment also. And when it comes to the disclosures, our experience is that actually there is not that much difference in the information to be disclosed when it comes to it's more philosophical questions, let's say, or and in practice, when we consider the frameworks provided by the ISSB on single materiality and the European one on double materiality, for example, the differences are not that wide. So we have decided at the IAIS to maintain the single materiality approach, consistent with the global baseline that has been set out in the ISSB.
Thank you, Jan. And now we have a question for Hannah from Andrea from the Financial Superintendents of Colombia. Hello, regarding the supervision of climate risks, is the IAS approach basically integrating these into traditional risks or proposing independent climate risk management? And before that, we'll also take one from Dave Schneider as well on the, so I'm just unmuting you, Dave, so you should now be able to speak.
Morning, good afternoon. Dave Snyder, APCIA. Thank you very much for this session. We look forward very much to submitting detailed comments on all of this. And I would just underscore from our perspective the importance of maintaining the single materiality standard. But moving to a more general question, are there particular issues that supervisors are looking for commentary on? Are there particular questions that would make our comments most relevant to supervisors as you examine the entire package as well as these particular proposals? Finally, I just want to underscore that in the U.S., the states are maintaining already a TCFD-based disclosure system that encompasses more than 80% of the industry in mandatory public disclosures. So hopefully that can be taken account of as well as we move forward as an example of forward-looking work by a jurisdiction. Thank you very much.
Thank you, Dave, for that. If you allow me, let me first respond to the question that was shared by Andrea from Colombia, and then we'll go back to your question around any specific areas of interest for feedback. So I guess the question from Andrea is also somewhat related to our third package, so the one that we published in March. So you may wish to have a look at that on our website as well, because there we had an explanation around how climate change related risks should be integrated in supervision, and notably in the corporate governance framework and the enterprise risk management framework of insurers. And it set out the fact that how the IS sees is that climate related risks they can translate into and affect the traditional risk categories that are already a part of the traditional corporate governance and risk management system of an insurer. So we are not seeing it as a separate and new risk category, but more as an amplifier and as a trend that can impact existing risk categories. And therefore, it's also very important to holistically and integrate climate-related risks into the existing tools and governance frameworks of an insurer, as it relates to market risk, credit risks, underwriting risks, etc. And also as it relates to the traditional tools that are in place already, like the ORSA, scenario analysis, and other aspects of the proper risk management processes. So not really a new risk, but really more integrating it in the traditional risk categories and explaining how it can impact that. On Dave's question around what we are particularly interested in terms of feedback, I don't know, Jan, if there's anything from the paper on supervisory reporting and disclosure that you wanted to highlight in that aspect.
Thank you, Anna. During the process of working on this application paper, we have consulted with international organizations of insurers and the private sector in general. So what we want to make sure that we have integrated to the best possible extent the opinions and views from the industry into the papers, knowing, of course, that we have taken a supervisory angle to this application paper. It's of course our main objective to help supervisors and to make sure that they have sufficient material to move forward with their supervisory regime. But if there is elements, in particular in the aspects related to governance and to data issues, where you would like to provide more intel and advices about how supervisors can make the best of what is available out there, or if you have views indeed on something that may be moving forward and or maybe being obsolete, in what we have prepared. It would be very helpful for us to have your opinion on how to make supervisors more efficient in designing the disclosure regimes and the supervisory reporting regimes. In that sense, also, if we have discussed elements that you think are too confidential in nature for being publicly disclosed, that's also something that we would be interested in. There is a fine line between public disclosures and what is needed for stakeholders and what we need to make sure that supervisors have when they are assessing the risks of insurers in the remit of their mandate. Thank you.
Thank you, Jan. So just a last call for questions. Please feel free to raise your hand or add them to the chat. I see we have one question from Elizabeth Jacobs at E3G. She asks, will the work of ICP 24 be finalised / informed by the up and coming GMAR financial stability exercise? So I think, Hannah, that's probably one for you.
Yes, so perhaps I give a bit of context for those people who might not know exactly what Elizabeth might be referring to. So next year, in 2025, we will publish indeed a special topic edition of our GMAR, which is a global insurance market report, which we typically publish every December, where we provide the outcomes of our annual data collection, which always has a section on climate-related risks as well, since a number of years now. But every other year, we also publish a special topic edition where we do a deep dive on a specific topic. For next year, the deep dive will be on the impact of natural catastrophe protection gaps and the potential impact on financial stability. So that is something that we will work on next year. So we will collect data next year and do analysis and then publish the report around the second half of the year next year. So in short, the work that we're doing right now on ICP 24 is already going to be finalized in the next couple of months, or actually early next year. So it will not be informed by that work, but obviously there will be close linkages with the two topics. And it is true that we did already publish a special topic edition on the financial stability impacts of climate change, focusing really more on transition risks a couple of years ago. And that has also been used to develop the material that is currently out for consultation. But it is true that next year there will be more work on this topic, but that's really more focused also on protection gaps and the natural catastrophe events.
Thank you, Hannah. And it doesn't look like we have any more questions. There's no more questions in the chat or raised hands. So just a final reminder that the slides from this presentation are already available online on the link that's been dropped into the chat. And a recording of this session will be uploaded in the next 24 hours. And we look forward to your consultation responses. I can't see any other questions, so I think we can give you 10 minutes back of your time. Thank you for joining us today. Thank you. Goodbye.